Welcome back to Ferocious Education. This is Ed. Today I'm going to be talking about PSFE, Paysafe. I'm going to be giving you an update about their operations, more of an extensive due diligence onto there, as well as a bit of technical analysis, institutional interest, and what we might actually anticipate from this one moving on. So let's jump right into this one. One of the latest packs in 2021, Paysafe. I've heard about their name before, but what better to do other than take a quick look into their analyst presentation that gives us a bit of insight regarding their latest operations and what's yet to come. So let's dig right into this one. So right off the bat, we get to see a bit of an overview of what Paysafe is. Back in 1996, they had a revenue around less than $100 million. And by 2005, above $100 million. Revenue in 2017 was $1.1 billion, and on 2021 is $1.5 billion. Now, a quick thing here, drive scale and growth. So what they're looking to do is win in key verticals, implement fully playbook, and drive market consolidation. And would they see themselves as 20 years from e-commerce pioneer and global leaders? And some of the things they look at for Paysafe is more of an industry in fintech, with an industry investment of initial investments in 2020, margin expansion, that's something they're looking at, multiple expansions, and multiple of equity. And so what they look themselves at as they are deeply embedded in attractive markets, upside from integration platform, consolidation from cross-sell, multiple acquisitions opportunities, and position to win in key high growth markets. Moving on, you get to see that the leading specialized payment platform and the global leader in iGaming, including sports betting, online casinos, lottery, esport, and fantasy sports, and going on as well to further on growing digital commerce and attractive verticals, driving global scale, positioned to win in market consolidation, the list goes on. And some of the global pioneer in digital commerce, you get to look at a total volume in 21 estimated to be around $105 billion, with a revenue out of that about $1.5 billion in 2021. And so some of the proprietary integrated solutions, including the number 2 global stored value digital wallet, and number 1 iGaming eCash network, and number 4 an independent merchant acquirer to the US. And you get to see number 2, you're looking at things like DraftKings, Bet365, Bitpanda. Number 1 there is Fortnite, Twitch, and Spotify. These are examples of the companies as I did talk about for digital wallets, Paysafe, eCash, and integrated processing applications. And then we go on a little bit further towards the digital wallets itself. There's around $1 billion of balances on there with around 3.5 million active users. You're looking into an estimated volume of around $20 billion with a take rate of 1.9%, and a gross revenue from this one around $297 million out of a revenue from $395 million, so a total basically of 27% of the pie. And then Paysafe eCash, you're looking into around $5 billion in volume, although the gross revenue from there is $185 million at 55% margin, although their total revenue is $333 million, which is 23% of the pie. And again, the last thing, Paysafe integrated solutions or processing, you're looking into around $68 billion in volume, including a take rate of 1.1%, giving you a revenue total of $720 million, cutting 50% of the pie, and around a margin of 57%, giving you $410 million. Now, Paysafe itself, you're looking into a total revenue of $1.4 billion and a gross revenue 63% margin of that at $892 million. And so 70%, 75% plus revenue from online payments. And you go ahead and see a little bit of how they work. And moving on towards their peer average, they're around 1.5 per superior take rate, which is almost double their peer average of 0.8. And you look as well into the trillion market capitalization on, for instance, the iGaming commerce and online commerce, and how they're trying to expand their take onto that. and the right to win in valuable verticals. So they're looking into things like, for instance, DraftKings, PokerStars. That's an $80+ billion market, a $1.5 trillion market for things like Viva Ticket and Norwegian for travel entertainment. Digital goods, Spotify and Fortnite, and fintech services like eToro and Paysend, $2.9 trillion, and integrated payments like MindBody and Rentmula. The market there is around $2.2 trillion. And so they're really trying to integrate themselves into these markets and try to capture as much as they can. And they say they are the global leader in iGaming, including in Europe and the rest of the world, Canada and United States. But nonetheless, we're just going to move on a little bit into a bit of an understanding regarding things like compliance. Now, there is a bit of different compliances that you do need, for instance. So, for instance, for Canada, they're registered with British Columbia GPEP. In the US, for instance, they're registered with Colorado Control Commission, West Virginia State, Lottery Interim Supplex licenses, and the list goes on. And so they have around 300 plus professionals dedicated to risk compliance and analytics there. And you go on further, they say they have 20 years of experience and more, with around 15 deals integrated and 300 plus deal experience in management team. And you go a little bit further on and you get to see some other things like product overview and vision and growth itself, but I think we covered a bunch of this already as we get to see here. So they are saying they're leveraging the Paysafe playbook to win in the US iGaming, already live in 14 states and connected to 75% of the US operators. They're talking as well about COVID-19 accelerating regulations, and we are positioned in an emerging state with leading operators with a dedicated team solely focused on the US market. And the list goes on a little bit further there. And they're talking regarding, for instance, the right to win in valuable verticals, and you're talking there again similar to the same categories: iGaming, travel entertainment, digital goods, fintech services, and integrated payments, as we talked about it before. And they do talk about selling the Paysafe experience, which is an opportunity to unlock over $100 million off adjusted EBITDA. And it goes under 5 main keys: operational leverage, Unity platform, global risk services, global servicing, and enterprise sales. You can pause and read a bit more about this one. Now, some of the things we're looking at is a little bit of their forecasts. And what we get to see here is, if we scroll further on, the total net leverage for 2021 estimated adjusted EBITDA, you're looking around $1.8 billion of pro forma debt, with a long-term leverage goal of around 3.5 times. Meanwhile, in 2020, estimated you're looking into 6 to 6.2 times, with a net debt of around almost $3 billion. Now, that is quite a hefty amount of debt to cover on there, but if you're looking into 2020 estimated and 2020 actual, they did actually beat their revenue and adjusted EBITDA. So that's what they're trying to go for, is that they're saying that they are more of an accurate representation for the growth. And what we cover here is that we see on the actual 2020 estimated, you hit around $92 billion in volume. Meanwhile, in 2021 estimated and 2021-3, you're looking at a CAGR of around 14% with $100 to $110 billion, and in 2023, $135 billion. So there is quite an amount of money there that they're looking into getting, for instance, in revenue. The revenue increase is around 10% on the CAGR, estimating that 2021 would be a bit more than 2020, with $1.52 to $1.55 billion compared to $1.426 billion in 2020. And in 2023, you're looking at a $1.88 billion. Now, if we were just to go back towards, let's say, the market cap itself, the current market cap is around $9.987 billion. So that is a quite amount of money relating towards their price over sales general, but we need to look a little bit into the growth itself, around 16%. Now, what we want to move on forward is a little bit of the latest news that we might actually have hit recently. So some of these news, for instance, Paysafe selects Amazon Web Services, AWS, as part of its strategic to become fully cloud-based payment provider. Through this collaboration, Paysafe is migrating its broad portfolio of mission-critical workloads, including eCash solutions, Paysafe cards, and Paysafe Cash, and its digital wallets, Skrill, Nettler, to AWS to develop new cloud-native merchant payments and consumer wallet products. Now, before moving on forward, if you'd like to see more contents like this, make sure to scroll down below, click that like button, and if you would like to join a bit of a community, you can click that subscribe button here with the bell notification button. And if you would like to join our Discord further, you click show more, join my Discord, totally free, and you can talk about other stocks or just discuss anything on there. I'll talk a bit more about it at the very end. There's no catch, it's totally free. Back towards the news, so we get this one on the AWS back on April 29th, and on April 27th, we're talking about launching a lifetime rewards for Skrill and Nettler customers as some kind of almost applying for free prepaid card, access bonuses, etc. Basically more of a kickback for transactions in general. And then Paysafe achieves carbon neutral certification for 2021 and 2022, which is amazing itself in terms of offsetting carbon emissions. That's definitely a green thing that a lot of investors would probably like to see. Now, Paolo Dybala signs a Skrill brand ambassador. Not a lot of information there. I mean, it's not massive bullish, for instance, but we're just going to move on from there. And Paysafe enables online cash donations to Verin. Not an important thing there as well. Launching Kinect customer reward programs. Already mentioned a little bit of that. And then completing their combinations of the business where it was closed back on March 30th. And so moving on from here, we can look into a little bit of the institutional interest, and we get to see that a lot of them are very bullish onto this one, but basically that's part of the discount that they did receive, probably around the PIPE investment around $10. But there is some prominent names here and there. I don't see, for instance, Morgan Stanley or JP Morgan, but you do get massive amount of shares from different funds nonetheless. So we can move on now towards technical analysis. Since this pack has closed up recently, we don't see a lot of technical indicators here as it's not populated much. All we get to see is on the willing percent R showing more of an overbought section, and the moving averages itself don't show much in that sense, neither do stochastic fast. If anything, it says be careful for a drop back. Well, I guess you can see that because the curve of the chart is curving a little, but on the Fibonacci retracements, we get to see significant supports and resistances. For instance, supports 1352 on the Fibonacci retracements, 1302, and 1220. Significant resistances 1393, 1434, 1492, and 1565. And then on the price line action, we see that these supports, some of them actually overlap, like 1350. Following that, 1301 and 1260. Significant resistances, a very strong one at 1382, going up to 1405, 1434, and then 1459 to 1486. So what is going on? Well, there's a lot of indicators for this one here. Their price over sales is a little bit trading a little bit towards, I would say, probably almost 6, 7. So that's a little bit overvalued. Not as overvalued as some other companies, like, for instance, the price over sales for Amazon, Microsoft, Tesla. These ones are massively because they're more of a growth stock. And the question whether this one will follow growth or value, and it looks currently is trying to trend a little bit towards value. And with a little bit of the SPAC bubble there's been a little bit speculations regarding, well, are stocks really value $10 for this one here? And the question is, the answer is I'm not exactly sure, because the valuation is not there fundamentally on the price over sales, for instance, but only time will tell, because it's 12-month trailing and you're talking about a pandemic response. And so in terms of revenue, they're making billions of dollars in revenue. The question is, how much of that can go to an adjusted EBITDA that is perhaps on par of their valuations and their market cap, which I think is very easy for them to do. So definitely an interesting stock to take a look at in the next couple of years or so. What do you think about the sticker? Make sure to mention down in the comments below. Share, subscribe, and like, and have a wonderful day. Now, if you made it this far into the video, I do recommend that you go ahead and join our Discord server. There's a lot of amazing folks in here. We do a lot of discussions here into the trading floor throughout the day. A lot of people are in there, and we do ask questions. You can ask me any question you would like on there. We do post research and DDs, and we hold weekly chat sessions. And we also do have a lounge in there. So make sure to actually join that and join the fun there. Have a wonderful day and a good one.